On this. All right, welcome everybody. Welcome to a live trading session. Today, we have the Federal Reserve interest rate decision. We have the FOMC statement, and we have the FOMC press conference 30 minutes after the interest rate decision. All right. Now, I'm just gonna go ahead and explain real quick, give you guys the basic formulas about interest rate decisions in case you are not up to date, fundamentally speaking. All right, so let's take that. First of all, we have to understand what is the effect of a higher interest rate decision or a lower interest rate decision on the US dollar. The US dollar is the most important currency in FX. It is the world's reserve currency. It is also treated by investors as a safe haven currency. So it is the most important currency for you to be paying attention to be understanding fundamentally. All right. For the Fed to increase or have higher interest rates, this usually means a higher cost of debt for the population, for the customers, for the consumers, right? Because if they are taking out a loan, for example, and the interest rates are higher, then they have to pay back more. So higher interest rates does equal higher cost of debt. Now, when you have a higher cost of debt, people are less likely to borrow, right? Now, when people are less likely to borrow, then they are less likely to spend, right? If they are borrowing less from the banks, then they are less likely to spend. You decrease overall economic spending. And when you do that, then the demand is higher on the USD, which brings a bullish dollar. All right, and vice versa. Lower interest rates brings lower cost of debt, right, which encourages borrowing, right, which means people are more likely to spend, which brings a bearish dollar. All right, this is the basics, right? This is the theoretical formula, as I would like to call it. Now, I would like to bring to your attention this chart. All right, the black line that you see over here, this is the interest rate decisions by the Federal Reserve. The price action candles, the Japanese candlesticks, these are the US dollar index on the weekly time frame. Now, excuse me. Now, what you will notice is when the interest rates are rising, as we said now over here, right? Higher interest rates, bullish dollar. When the interest rates are rising, you see the USD, the DXY, the dollar index also increasing in value, correct? And when the interest rates are dropping, you see consequently the dollar dropping in value as well. So you see that as well. So over here, you see the interest rates rising, bullish USD, change of trend, interest rates dropping, and that was due to the COVID-19 lockdown that happened in the US. You see interest rates dropping, hence a bearish USD. Interest rates, of course, the dollar starts to pick up momentum prior to the announcement of the interest rates, actually prior to the interest rate decision date, because usually you have Federal Reserve headlines that are telling you that we are going to raise interest rates, we're going to hike rates. So investors start pricing it in ahead of time. All right. So as you can see from, I believe it was the first interest rate hike was on March 16th, 2022. It was raised by 25 basis points. And then we had the second interest rate hike, which was on, first one was on March 16th, May 4th, where the Federal Reserve raised by 50 basis points, right? Bringing the total interest rates currently to 1%. But you guys, I just wanted to explain the correlation. You guys see the correlation between the interest rates and the dollar value, right? So just confirm to me in the chat that we understand this point so we can move on. Okay, some people are texting privately. Okay, so we understand this point. This point is clear. Let's move on. All right. So now that we understand this, right? Now the Federal Reserve, we're heading into an interest rate decision. What is expected, what the Federal Reserve has been saying throughout the previous weeks, they have been expecting a 50 basis point rate hike. So accordingly, investors have been buying the dollar, increasing the demand on the dollar. Let us open the DXY chart. This is on the hourly time frame. Let's take a look at the daily. Erase this. All right. So which was it? May 4th, right? Correct? Yeah, May 4th. So, and I will explain why this correction happened as well on May 4th, right? But since May 4th, investors have been pricing in an increase in interest rate decisions, and hence the dollar has been moving to the upside, as we just now discussed the formula for interest rates versus the dollar value. The reason why we have this bearish correction that happened over here is because the European Central Bank started announcing that they will also be raising interest rate decisions. And the European Central Bank in the past, they have been dovish, meaning that they were unwilling to raise interest rates, right? Now, as we guys know, basic correlation between the dollar and the euro is negative. So when the euro goes up, consequently, the dollar goes down. So the European Central Bank, by announcing that they will raise interest rates throughout the upcoming year, placed bearish pressure on the dollar, and this is why we see this correction to the downside. However, when the interest rate decision finally came from the ECB, they actually did not raise interest rates. Thus, this was false. This movement was false. And we call this in the premium server, you guys know, we call this a price action gap. And this was corrected consequently to the upside. And overall, since the start of the hawkish tone from the Federal Reserve, increasing interest rates, we have been calling bullish dollar since, I believe, 94. We are overall for the year in an extremely, extremely bullish trend, right? So now what we have to understand that the Federal Reserve has been saying that we will raise interest rates by 50 basis points, right? And since they have been saying that, investors have been already buying the dollar and the dollar has been pushing higher. So if they actually do raise 50 basis points, the move is already priced into the markets, which means we will see a slight correction to the downside. And then we will either tomorrow or throughout the week continue with the overall higher time frame trend. But if the Federal Reserve decides just to raise 50 basis points, like the investors have been pricing in, then we will see a correction to the downside. It's the exact same thing that happened on May 4th, right? Investors were pricing in a 50 basis point rate hike. We did get a 50 basis point rate hike. And in return, we got the correction to the downside for 1 day, and then we continued going higher. And then the bearish correction happened due to the ECB headlines. Does that make sense? So this is our first scenario. 50 basis point rate hike. All right. So 50 basis point rate hike means the Fed hikes rates by 50 basis points, and they do not deviate from their original schedule of 25 basis point rate hikes until next year. So let's explain that, right? So the Fed has a plan, right? They want to, I believe, if I'm not mistaken, they want to raise 50 basis point this interest rate decision, and they want to do 50 basis points the next interest rate decision, and then they want to continue 25, 25, 25, 25 until they reach their goal of 3%. All right. Once they reach, this is their goal, and their goal is to hit 3% by summer of 2023. Now, the reason why they want to do it slow, 25 basis point hike each interest rate, is because if they do it any higher, they risk huge volatility on the US stock market and it crashing, right? And this is why they call it a smooth landing. If you guys have heard that term in the headlines, if you've been reading the Fed's headlines, right? So they want to have a smooth landing until they reach 3%. So this is the reason. So they want to increase, I believe, 50 basis points this interest rate decision, another 50 basis point the next interest rate decision, then they want to keep on increasing 25, 25, 25, 25, slowly but surely, right? To ensure a soft landing. Now, if we get a scenario where today, where they raise 50 basis points, and they say, we're not going to deviate from our original plan, and we will continue with the soft landing plan that we will raise 25 basis points each interest rate decision, then we will see the same correction that happened on May 4th. Does that make sense? Right? Now, what does that mean? Now, if the DXY corrects to the downside, right, that means we're going to see bullish momentum on gold. We're going to see bullish momentum on US indices. So going back to gold and US 30, right? If that is the scenario that we receive, we will see bullish momentum on both gold and US 30. All right? That is the first scenario. We understand now the first scenario. 50 basis point rate hike and no change. This is no change. And no change in schedule for future rate hikes. It was a bearish DXY, bullish gold, bullish US indices, but it will be short-lived, as we saw on May 4th. All right. Now, the second scenario is, scenario B, is that if we do get a 50 basis point rate hike, however, in the FOMC statement that will be released, they decide to change their future plans for raising interest rates. As we said, their original plan is to raise 50 basis point this interest rate decision and the next one, and then go 25 basis points afterwards. Now, if we see deviation from that plan, and they decide for some reason to raise it more aggressively, let's say they hint at 75 basis points rate hike for the next interest rate decision, or they will say we will do 3 consecutive interest rate decisions where we will see 50 basis point rate hikes, then this is not priced into the markets, right? And since it is not priced into the markets, then we will continue to see bullish momentum on the DXY, which will continue pushing gold to the downside and US 30 to the downside. All right. In this scenario, the Fed hikes rates by 50 basis points. However, in their FOMC statement, they deviate from their original schedule of 25 basis points. rate hikes until next year to a more aggressive 50 basis point rate hike, or hint at a 75 basis point rate hike for the upcoming interest rate decision. All right. This scenario is not priced into the markets and will be perceived as extremely hawkish, right? 50 basis point rate hike and change in schedule for future rate hikes equals a bullish DXY, bearish gold, bearish US indices. Do you guys understand the difference between scenario A and scenario B? They're both 50 basis point rate hikes. However, one of them is there is a change in schedule for future rate hikes, and one is without. Is that clear? Understood. All right, perfect. Now, we move on to scenario C. Scenario C is a 75 basis point rate hike. There are some rumors and some leaks, quote unquote leaks, right? So if it is 50, wait a second. So if it is 50 basis point rate hike, we need to wait for the conference. No, there is an FOMC statement. So what you need to do is, I suggest you guys visit this website, financialjuice.com. I'll send it in the chat. All right. Here we will keep up with the headlines, right? So if we start to see, because there's an FOMC statement and then there's the FOMC press conference, right? And those are two different things. The FOMC press conference is a little bit dangerous because the interviewers can steer Joe Powell into saying some stuff that can impact the market in a short-term way, right? But the FOMC statement, if they state that they are looking at an increase in interest rate hikes in the future, and the next interest rate decision maybe 75 basis points, or they say 3 interest rate decisions in a row, we're going to be raising 50, 50, 50, or maybe they will say that our target was previously 3%, now we're aiming for 5. If they deviate from their original plan, then this will be perceived as hawkish, regardless if they raise 50 basis points or not. Does that make sense? Nicola, sorry. All right. So, scenario C. Scenario C is a 75 basis point rate hike. This scenario started to quote unquote leak from the Wall Street Journal, I believe, if I'm not mistaken. Let me see, I wrote it down somewhere. Yeah, the Wall Street Journal. Now, this might be true. It might be a true leak, and it might not be. It might be a trap, right? So retailers can start to get into positions prior to the interest rate decision being announced, right? So it might be both, but what we have to do is we have to wait for the interest rate decision to come out. If it comes out as a 75 basis point rate hike, as in scenario C, then that is not yet priced into the markets. It came out recently and it started to get priced into the markets, but it is not fully priced in, if that makes any sense. All right. So this scenario is not priced into the markets yet, as only rumors have been circulating around it with no confirmations from Fed members. This will be perceived as extremely hawkish, right? Which means bullish dollar, bearish gold, bearish US indices. All right. So these are the 3 scenarios that we have. Scenario A will be a short-term correction like we saw on May 4th over here, right? Scenario B will be a bullish continuation to the upside on the dollar, consequently bearish on gold, bearish on US 30. Scenario C will be a more aggressive bearish scenario, right? Now, if we look from a technical perspective, purely technical, we will realize that gold throughout London, Asian and London, has pushed to the upside, retested this SNR area that we have over here, and started to retrace to the downside. If you look at it from a little bit of a higher time frame, maybe on the daily, you will see it more clearly. You see this area over here, the previous support that has been broken, price has went up, grabbed liquidity, and is now pushing to the downside. Now, this could be in anticipation that the Federal Reserve will be presenting an extremely hawkish sentiment, all right? But what we will do, we will wait for the interest rate decision to come out. We will keep up with the headlines on what the statement is releasing, and accordingly, we will trade it. Now, what I would like to have, I remember from the previous interest rate decision, it took around 45 minutes for the volume to kick in, but also in other situations where I've traded the federal interest rate decision, it was an immediate move. Now, it would all really depend on which scenario we take. If we get a 75 basis point rate hike, then it will be immediate bearish momentum to the downside, right? If we get a 50 basis point rate hike, we will have to go look at the headlines that are coming out and analyze if there is a more hawkish tone coming into the market, right? And then if we do get scenario B, I anticipate for us to get a liquidity grab to the upside before we flip bearish and continue to the downside. So the best idea would be to wait, if we get a 50 basis point rate hike, to wait for the liquidity grab to the upside and wait for the bearish flip to continue to the downside. Same thing on US 30, maybe break below the current lows over here, previous 4-hour lows, continue down, flip the daily candle, and continue targeting the previous daily lows we have over here, right? So that would be the plan. So we can short immediately on 75 basis points. Look, here is how I do it personally. I divide my entries into quarters, right? So whatever your risk is, let's say if your risk is 1%, then 0.25 each. So I would take an immediate position. If that was the case, I would take an immediate position, right? And see how price is reacting. If it is reacting the way I want it to, I would scale in, right? So I don't go in with full risk and then having made a mistake, you know? But if my anticipation is, if we do get a 75 basis point rate hike, then it will be an immediate drop. If we do get a 50 basis point rate hike with a more hawkish tone from the Fed, then we will see a liquidity grab to the upside, then the drop. Now, something that I have to mention is last time the guys in the premium that traded the interest rate decision with me, let me see if I can pull it up. We didn't get as aggressive of a pullback. It was a slight pullback, then we rocketed to the upside because the DXY dropped. So let me see if I can pull this real quick. So here, let me pause that, all right? So here we had our scenarios, right? Lower than 50 basis point, 50 basis point rate hike, and higher than 50, right? So what we were expecting a deeper pullback, liquidity to the downside. This is US 30, and then push higher. But in reality, we only got a minor wick, right? So take that into consideration. The liquidity grab doesn't have to be so huge, right? And it took a bit, like this is 1 hour and 27 minutes into the session, all right? And if it doesn't happen as fast, this is also good because you get to prepare, right? So I just wanted to pull this previous example. Let us see if we. So you see, this is Euro USD, US 30. Here we go. All right. So we're expecting a slight liquidity grab to the downside, then push higher. We were expecting something deeper, but we didn't get something deeper. We instead, an hour later, got something, a wick like this. No, sorry, this is pound USD, my bad. Here we go. We got a wick like this. All right. So this is just something to take into consideration. So this is my personal plan. Let's do this. This is my personal plan for the Fed interest rate decision. Now we can take the next 25 minutes, 20 minutes, let's say, let's have 5 minutes before that just to prepare our MetaTraders and all of that. I can take the next 20 minutes to answer any questions. If you guys want to send charts, this is my scenario. This is what I'm looking at for scenario A. This is what I'm looking at for scenario B, C, etc. We can start reviewing those and going through those in details. Otherwise, this is my plan. So what you have to be doing right now, if you're looking to trade the interest rate decision, and it might be anticlimactic, by the way, so don't have high anticipations. If you're looking to trade, what you should be doing is having something like I just showed you in the previous interest rate decision, having your scenarios mapped out on the chart. You see, something like this. So you know, because if you prepare it ahead of time, you don't have to really think about it when it's ongoing, right? So being proactive versus being reactive. We don't want to be reactive, we want to be proactive. So have it in front of you, have it as a visual aid in front of you on the chart. So when it does happen, you know how to act. That is my tip, honestly. We can see gold continue. Man, I should have held. We can see gold continuing to break lows, going to the downside. The 4-hour has officially flipped bearish, broke below previous 4-hour lows, increasing the probability that we're going to continue down. We have broke this low over here that hasn't been retested. I believe this was throughout maybe Frankfurt, late Asian. We are now breaking these lows over here on gold. US 30 is no movement, just ranging sideways. So it seems like just by the prior price action, it seems like gold is going to be more volatile. Just because we can see how price action is moving prior to the interest rate decision. So I will keep this here, so you guys know what you're looking at. I would have your MetaTraders open, prepare your settings, prepare your scenarios. Which pairs are you looking to trade? By the way, you can trade Euro USD, Pound USD, other USD pairs, USD Yen. USD Yen has been a really easy pair to trade for the past couple of months due to the complete opposite central bank fiscal and monetary policies. So it will be tricky if we get a 50 basis point rate hike, but a 75 basis point rate hike is pretty clear. My personal anticipation, if I were going to gamble, I think we're gonna get scenario B. It is a much easier trade if we get scenario C, but I think we're gonna get scenario B. Dun, 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 dun. And by the way, guys, this applies to, for all you crypto traders, this applies the same. So if you look at BTC, see, yeah, oops. May 4th. April, was it May 4th? Where is it? Here we go. Slight upward correction before the downtrend on the interest rate decision. Same with Euro USD. This was the previous, already highlighted here. May 4th. Here we go. Upside, then bearish momentum. And of course, this bullish trend was the ECB announcing that they will raise interest rate decisions. Then on June 9th, they didn't when the interest rate decision came, and it just got completely corrected. For the people in the premium, this is when I sent this to show you guys that this will be corrected just because the European Central Bank did not actually raise interest rates. Here we go. It's this one. All right, US 30 as well. May 4th, we traded it live. May 13, here we go. Here it is. May 4th, just for one day, and the second day we got the correction. Hey, so I have a question regarding your gold trade yesterday. Why did you place the SL at that level? I couldn't come to the same analysis. Maybe you saw something I didn't. So you're not talking about this one from today. You're talking this one. Is that correct? This trade? Okay. So this one, I will explain to you the SL play. I will explain to you the entry and the SL placement. Right? So obviously the fundamental bias, the higher time frame bias of gold is bearish due to the hawkish tone of the Fed, right? And we've been playing bearish gold for a while. Now, here's what I did. I waited for the breakout at the time. Let me see, open my notes real quick, because we presented it step by step. Okay, here it was at the beginning, right? We were waiting for, so as we guys know, the daily candle, just looking at it from a higher time frame perspective, right? If a daily candle were to close bearish, it usually, there's a very high probability that it will create an upper wick first, right? Let me actually bring out the illustration so you guys can know exactly what I'm talking about. Because it was a combination of a higher time frame analysis plus a lower time frame analysis. The confluence of both is what got me the entry, but the SL placed, I will explain to you how the SL was placed. I'm just trying to find the candle illustration. Okay, there's this one, but this one, I want the opposite one, the bearish one. All right, here we go. I found it. Okay, here we go. Now, imagine if this was the daily time frame, right? There's a higher probability that the daily candle will create an upper wick first, then flip bearish to continue to the downside if the candle were to close bearish, correct? So what I saw over here is throughout Asian session, right? And early London, price, the daily candle had created an upper wick to the upside, right? And then started to flip bearish. And we were holding previous daily lows as support. You can see the candles over here closed above, right? And we were just starting with New York, entering a New York volume and starting to break, come towards the price of where the daily candle opened, hence creating an upper wick on the daily time frame, right? On the hourly time frame, we can see that the previous daily lows and the psychological key level of 1820 was holding as support, right? So it would make sense if we started to break below after creating a liquidity grab to the upside on the higher time frames and a lower high on the hourly, right? Retest of this area we have over here to the left, that we have a higher probability of at least filling this wick to the left, correct? So what happened was I executed on the retest after the breakout, and I placed my SL above the previous hourly wick, because if price were to start reaching above the broken support, number one, number two, breaking above previous hourly candle upper wick, then there's a higher probability that this was a false breakout and we're continuing to the upside. And by that point, I want to be out of the trade. Does that make sense, Yazan? Welcome, welcome, Mr. Thomas. So, okay, now we have 15 minutes. We've gone through all the scenarios we have. We've explained in depth how the federal interest rate decision, in which scenario it comes out, and how we can use it to attack the market to place our trades accordingly. Here they are again. All right. And now we just have to wait for the federal interest rate decision to come out and see what kind of headlines come out in the statement, because scenario A and scenario B are relatively close. Just scenario B is a change in the statement where they will deviate from their original plan and start to say that we will raise more aggressively, maybe a 75 basis point rate hike in the next interest rate decision, or our goal of 3% is no longer there. We are now aiming for 4 or 5%, or we will increase 50 basis points for the next 4 interest rate decisions. I don't know. But if they deviate from their plan, they will present a more hawkish tone, and that is not priced into the market. Yeah, no problem. Yes, just if you want, chart up your gold chart, and we can go through it again in the server. So I'm only looking at gold and US30, but of course you guys can look at Euro USD, Pound USD, BTC USD, USD Yen, all of those pairs. It's the same type of scenario, because it will all go back and depend on the DXY. Yeah, we might get gold buys. We might get gold buys if the federal if the Federal Reserve increases 50 basis point hike and they don't deviate from their plan, then I think we will definitely get gold buys. I just personally see us retesting this area that we have over here to the left today throughout New York. You can see it more clearly on the daily time frame, right? Over here. creating this wick and now we're pushing to the downside, but it really all depends on what kind of tone the Federal Reserve present today. But yeah, we could easily retest these highs today, the daily highs. I wouldn't really prefer to be executing during the press conference. I would much prefer to execute prior to that, and then if I am in profit, hold it risk-free throughout the conference, secure partials. And that would be the most optimal scenario for me personally, because in the press conference, the interviewers can lead Powell in so many directions, and it can just, price action can just fluctuate in an extremely volatile manner. We also have tomorrow, if I'm not mistaken, the Bank of England interest rate decision. So we'll also do a session for that. Same, by the way, same type of technique, same type of ideology, what is priced in and what is not priced in, and then acting accordingly. We have the interest rate decision in 10 minutes. I'm gonna actually go grab some water, visit the bathroom real quick, and then we'll be ready to go. You guys can take this time to set up your MetaTrader accounts, set up your plans. Where are you looking to execute? How much risk you're gonna take? All of that stuff. So gold buys to take an advantage of the liquidation grabs. No, if we are getting the scenario of gold buys, then we are probably going to grab some liquidity to the downside as retailers will jump in. You're lost. No, gold buys will happen if we get a 50 basis point rate hike with no deviation from the plan of future rate hikes, right? The scenario A. This is in that case, we'll take buys. And what will probably happen, because retailers will be quick to jump in DXY buys, right? If we get a 50 basis point rate hike, we will get some liquidity grab to the downside and then start to flip bullish. And then that would be a good area to start loading up long positions. But in the other scenarios, no, then we will continue with the bullish DXY bias. All right, guys, I'm just gonna go grab some water and I will be back. You guys can now, 8 minutes left, you guys can prep and I'll be back soon. All right. All right. I'm back. Okay, let's see. What do we have? Right. Interest rate decision in 2 minutes. We are already seeing US 13 gold retracing a little bit. Last time it was anticlimactic. We waited, I think, an hour until the volume kicked in. US 30 pushing up. If you guys get the news before me, let me know. Okay, we should have it now, but I'm not getting anything. Does anyone have it? Oh, they did a 75 basis point rate hike. No? Yes, they did. They did a 75 basis point rate hike. Okay, so we need to wait. Wait for the liquidity grab to finish to the upside. Be patient. A 75 basis point rate hike is not priced into the markets. All right, now we're getting the liquidity grab. We see it here on US 30. We see it on gold as well. Yes, we should be heading to the downside. We already see it on US 30. All right, this is scenario C, guys. Scenario C. We just need to wait. There will be liquidity grabs to the upside. Do not scale in completely. As I discussed, divide your entries. All right. You guys should be looking at previous 4-hour lows. We need to start breaking below over here on US 30. So let me go ahead and highlight that real quick. We need to start breaking below this area over here. Then we have a higher probability to continue down. Of course, if we flip the daily candle bearish as well, that would be great as well. So we did get the upper wick, so that is good. It's good that we got that liquidity grab first. Gold is now starting to push more consistently. That US 30 is still bouncing around as NYSE is still open. Really nice. Playing out exactly as we discussed on gold. Here we go. Here we go. US 30 as well, following behind. I have a couple of positions open. We did just take out these lows that we had over here. Now I'm looking for 1815 or gold. US 30 as well. Now we are at the area of previous 4-hour lows. Let's see if we can continue breaking below. M5 over here on US 30, we created the upper wick, retest of 30500 psychological key level, respecting previous highs. Start breaking below these lows, we should be able to get towards the daily open. With gold, we should look for this M5 candle to flip bearish. All right, we are moving. Let's go. US 30 deep. Perfect. I'm looking to start securing partials at 30300 on US 30. This is my first TP. All right. Securing most of my position over here on US 30. Daily candle flip bearish. Rest of the trade is SL to BE. Congratulations, if you guys caught that. Perfectly played out as scenario C. Perfectly played out. So if you guys caught that move, congratulations. Gold, we see it retesting previous 4-hour lows. We need this M5 candle to flip bearish for bearish continuation. But excellent job to anyone that caught US 30. Super simple and direct to the point once you understand the fundamentals behind it. Played out perfectly. Bullish DXY, bearish gold, bearish US indices. Good job, Thomas. Oh, you caught it from the low. All right, nice. Good job, good job. So I want to aim, and you guys should be aiming for the same thing. We should be aiming to get out of the trades prior to the press conference. And then we will end the session there. Yeah, this was a perfect target. Let's see what kind of headlines we got. Being review forecast shows Fed official. Okay, so so they did increase from 3% to 4%. So where's Nikolai? Nicola. This is what we were talking about today. All right, so new headlines showing that they are increasing their goal from 2 to 5% to 3%, all the way to 4%. And then Fed policy projections show they expect to start cutting rates in 2024. So this is continuation of high inflation, and they're gonna, that means they're gonna take it probably slower and increase the timeline. I'm getting triggered at BE with the gold positions. I might get triggered soon. I entered somewhere around here. I'm already out of US 30. My target was 30,300. So we got out on this wick over here. Gold, our target was these lows, but we did not reach them. We got the correction. We're getting taken out at break even right now. The goal was the initial movement of and to get out prior to the FOMC what's it called, the press conference. So we got the upper wick, which we talked about, and then the bearish flip. Then we started taking entries there. Did you join us now, or did you join from the beginning? Yeah. I don't think you should be looking to take any trades now. The official move has been already done. The move that we have planned was this one, which was scenario C over here. Yeah, if you guys joined now, it's too late, in my opinion. The move is already done. At least the move that I planned for is already done, which was this one over here, the liquidity grab to the upside, then the bearish flip and the push to the downside on the news of a 75 basis point rate hike. Same thing with gold. The liquidity grab to the upside, then the push to the downside. It did not meet my target, and I ended up got out at break even, but I secured good profits with US 30. Oof, 75 basis point rate hike in July, and a 55 probability of a 50 basis point rate hike in September. Man, the market will crash. The stock market will absolutely crash. That's this GDP growth. This is like they're increasing the duration of, so instead of summer 2023, now it's 2024, and instead of the 3% target, now they have a 4% target, and instead of raising 25 basis points in the next decisions, now they're gonna have, there's a high 93.4, I don't know who came up with that statistic, but there's a 93.4% chance that they raise 75 basis points in the next interest rate decision, and then another 50 in September. Here we go again. The reason why US 30 was a cleaner trade than gold, because you have to understand gold also acts as a safe haven, and these type of news, they scream fear. But let's look at the DXY, what's happening in the DXY. Push to the upside, created the wick, still holding an hourly bearish bullish candle. Makes sense. Good job, Thomas. Great catch. Good job, good job. So I'm gonna stay in the session for another 12 minutes, but I'm not going to be trading throughout the press conference, as we discussed, because the interviewers can lead Powell to say some stuff that will have drastic change in the market for a short time. So I don't want to play that game. I would much rather wait for the press. I wanted just to trade the interest rate decision itself and then wait until the press conference is over. Then we can trade tomorrow, smoother price action. And also tomorrow we have the Bank of England interest rate decision. So if anyone has any questions, I'll be online for another 10 minutes. Then I think I will call it a day. I think it was a very successful session. And congratulations to everyone that caught US 30 shorts or gold shorts, although it was short-lived. Now, this was the opposite actually of what happened the previous interest rate decision. But still, this is why we set up different scenarios and we go through them ahead of time. So we know whatever happens, we know how to act. So actually the Wall Street Journal leak was true, but we couldn't like rely on it. So we have to be prepared for all scenarios. By the way, the US 30 looks like it's just retesting currently. We could easily see it revisit 30,300, but I wouldn't play this game right now heading into the FOMC press conference. All right, guys, most of you are leaving, so it looks like everybody took their trades. I think this is done for today, for me personally, at least. We closed the day in profit. And we had a good reading, good prep. Prior to that, we understood exactly what is happening. This session is, by the way, recorded, so all your premium members you can go back and rewatch it and prepare for next time as well, the same exact way. I will also do tomorrow. I will go ahead and prep and send it to you guys, the BOE preparations, and we do the same thing all over again. All right. So thank you guys for joining. Thank you guys for watching. Congratulations on the profits. And till tomorrow. No problem. Thank you. Thank you.